All right, let's jump right in. For this analysis, we're going to do something a little different. I want you to imagine it's December 8th, 2025. We're looking at the XRP market from the future. And from this perspective, wow, a really fascinating story starts to take shape. A story about some serious hidden pressure building up. Okay, so here's the big puzzle we're trying to solve. You look at XRP's price, and honestly, it's kind of boring. It's just sitting there, stuck around $2.03. But, and this is a big but, the story brewing just under the surface looks like it's about to get explosive. So what gives? And that leads us straight to the core idea of this whole analysis. It's called the coiled spring effect. Think about it, right? You push down on a spring harder and harder. From the outside, it might not look like much is happening, but you know it's just packed with potential energy, just waiting to explode upwards. Well, the argument here is that the XRP market is that exact spring right now. So what's actually winding that spring so tight? Well, it's a classic story, really. A massive tug of war between two completely different types of players in the market. We're talking about retail fear versus institutional greed, a huge divergence in what the little guy is doing versus what the big money is doing. And this right here just lays it all out. It's pretty stark. On one hand, you've got the retail crowd, and the sentiment is extreme fear. I mean, there was a 20% drop, so people are panicking, they're selling. But then you look at the other side of the coin. The institutions, they're doing the complete opposite. They are aggressively accumulating. They're literally buying the dip while everyone else capitulates. And we're not talking about a little bit of buying here. Look at this number, $861 million. That's the net amount of money that has flowed into US spot XRP ETFs in just 15 days. Think about that. That is not pocket change. That is a massive strategic play. And remember, these are spot ETFs, which means they have to go out and buy the actual XRP to back them. They are pulling real coins right off the open market. And that's the real kicker here. This isn't just casual investing. The source analysis calls it a systematic absorption of the liquid supply. What does that mean? It means the big players are basically acting like a giant vacuum cleaner, sucking up all the available XRP from exchanges. And when supply gets that tight, well, that's how you get a supply shock. Suddenly, there's just not enough to go around, and you can imagine what that does to the price. Okay, so that's the big picture, but let's zoom in a bit. What needs to happen right now? In the immediate short term, it seems like all eyes are on one single critical price level, a hurdle that could really kick things off. So here's the bullish game plan, laid out step by step. Step 1, the big trigger. You gotta get a solid daily close above that $2.15 resistance. If XRP can do that, the analysis says it could set off a rally. The next target, 250. And if the momentum keeps up, the goal after that is the 285 zone. It's like a series of dominoes just waiting for that first push. But, it's never a one-way street, is it? We have to be realistic. What's the risk here? What happens if the price goes down first? What if it breaks below support before it ever gets a chance to break above resistance? This is where the analysis gets really interesting. It suggests that a dip down to, say, the $1.90 range might not actually be the disaster you'd think. It could be a classic bear trap, a final nasty shakeout designed to scare all the weak hands into selling right before the real move to the upside begin. All right, so let's zoom back out. That's the short-term battle. But how does this all fit into the long-term view? We're talking about the 2026 forecast now, and this is where that super cycle scenario really comes into play. So check out this potential roadmap for 2026. You've got two paths. The conservative target for early 2026 is sitting around 320 to 350. Not bad at all. But then you've got the super cycle target, the really big one this analysis focuses on, and that's aiming for a range of $5.50 to $6 by the middle of the year. A huge difference. So you might be asking, why on earth would the price go that high? Well, it's not just wishful thinking or lines on a chart. The analysis points to some major fundamental drivers kicking in. I'm talking about the SEC legal battles finally being in the rearview mirror, a much more pro-crypto environment in terms of regulation, Ripple's own stablecoin, RLUSD, becoming a liquidity anchor, the massive potential of grabbing volume from the old SWIFT network, and of course, the launch of tokenized real-world assets right on the XRPL. It's a whole new world of utility. Okay, so let's boil this all down. What's the one big takeaway here? At the end of the day, it's all about who is buying and who is setting the floor for the price. And this line from the source material just says it all.
The floor is being bought by billionaires, not bots. The point is, the support holding the price up right now isn't just some random computer program. It's intentional. It's big money, making a deliberate choice to build a foundation right here.
So that's where we land. The story this analysis tells is one of a supply that's getting tighter and tighter, while the price looks deceptively calm on the surface. It all leads back to that one single massive question that everyone is wondering. When does the spring finally uncoil?